Hey, thanks, Johnny. Last week we covered a few things, some of my favorite indicators, and I think we also talked. You know what? I'm going to do this real quick and run a poll. It's going to be a real simple poll, and I'm going to do anonymous. I'm going to share the results. Were you here for last week's webcasts? So wait. Don't answer this. I'm putting up a poll. Don't answer yet. Hold on, everyone. I should never talk out loud. All right, start. Now, answer the poll that's in front of you, either yes, no, both. And that would help me so then I can say, all right, because even if you weren't, change your answer if you saw the recast, because I believe we did recast them, or saw those. So, because I'm going to reference last week's session, and if nobody saw it, well, that's kind of an issue. And then we'll give it just a couple seconds, not many more, because really, I mean, you guys had probably an interesting day today. Nice trend up. If you were bearish the market, I won't be going that route for anyone. And I think there's a lot of our students in the room here that know we're still bullish. The trend's still up. The trend's your friend, and there's some good stuff going on, and we'll disclose that today. But if no one was here last week, then half of what I'm going to say, I'm going to have to reiterate. So it looks like about 75% of people were not here last week. All right. So I'm going to just stop the poll if that's okay. And I just wanted to get a picture of where we are. And so for the most part, we're going to walk through the Thinkorswim, how to set up some charts, how to set up some scans, for example, using PPS, buy and sell signals, how to load the indicators, and a lot of what we're going to talk about today is relevant and a follow-up, so to speak, of what we did last week. Last week we talked about how to come up with trading ideas, how to just cut through the maze, instead of just going around and trying to figure out the different concepts and try to guess and try to outsmart the market. A lot of people are trying to outsmart this market, and I think there are some technical analysis tools that can help you uncover opportunity, and we're going to talk about those. Once you do have a good idea, or at least a foundation of a strong concept of a trading idea, your next level is to look for a strategy. What's your best strategy? And then, of course, execution. If you got a great setup, a great signal, and you have your strategy and you put your order in and you can't get filled, then that's a problem. But once you are filled, what's the next phase? How you manage that trade. Where's your stop go? Where's your exit? Where are you managing that trade? And then what's your position sizing? Do you have too much on? Did you cut back? Do you not have enough on? So these are the, what I call the 5 bullet points of really focusing in on trading opportunities. Last week we talked about some trend following concepts, both of which have come out of my latest book, which I'm to be honest with you, I'm really excited about it. I think it's the best work I've ever done. Some of you, if you've bought my books before, or my research and my analysis, you will find that this is probably, and I know we had some people that we had a great special that for our community. We gave them out sent them out for Christmas time. I don't know if anyone's had a chance to read those, but it really does give a great analysis from start to finish on seasonal analysis, how to use relative comparative strength, or what some people would call maybe a pairs trade. Others would look at calling what we call relative strength comparison analysis, taking one product versus another, or comparing one sector to the overall market to find out what's strong or weak. And we've been doing a lot of that in uncovering the overall inherent weakness in the NASDAQ. It's been the laggard, and this is something that we did cover last week. But trend following, and it's a life philosophy. Real simple. You got to let the winners run. You can't, if you're looking at a trend in the market and you say, hey, I'm going to get short or I'm going to cut my profit, you got to let it run, and that's the hard part. People, it's I don't know. I guess it's easier said than done. People like to, cut those winners fast and actually let the losers ride. I'm not sure why, but most people, and let me tell you something, folks. I've been there too. I've tried it all, and I think a lot of people, they maybe look for that quick profit, and then they go, well, I got into a trade and it's not working for me. It'll turn around, I'm sure. Or maybe I'll just sell here because it can't go any higher, and then all of a sudden the market does go higher, and it's like, well, I'm losing money and I don't want to take that loss, so I'll just double up and average my loss in, and that'll give me a better price, and I'm sure on the next down tick or two, I can cover that position. And that's not really a trend-following system. Trend following requires a lot of discipline. You got to go with the flow. One of the things that helps is seasonal trends. And I think seasonal trends right now, one of the things we also talked about last week was the situation where we typically get a January sell-off in the market. And almost every single one in this room, I bet, is trading in the market and knows that we've had kind of up until today more or less of a sideways trading action. And one of my messages is that corrections come in two forms. They can either be sideways or down. This is something we've been discussing for the last week, almost week and a half, 2 weeks now. And that's exactly what we have seen happen. With the exception that in a correction, what we talked about nearly 2 weeks ago and early last week was that there are certain sectors that begin a seasonally weak period of time, and there are certain sectors that begin a seasonally strong period of time. And so in using all these tools, we wanted to help people understand that if we do get a correction in the overall market, what sector's the weakest one, and then if you can scan for stocks in that sector, look for sell signals, then you could possibly take some decent trades, or at least come up with a trading strategy. And I'm sure for the few people that were here, because the majority were not, we talked about the inherent weakness that was coming in the high-tech sector, which is the internet space, and excuse me for this, the internet space, which IIX is a symbol, and one of the top names in that sector was Google. And we've been talking about that if you take a look at the overall market, this space it starts to enter its seasonally weak period. So first off, when we look at trend following, we look at seasonal trends, and I think it's very important for traders to say, okay, if I'm going to be just trading the indexes, if the market is, if more money is flowing into maybe blue chips, if more money flowing into maybe small caps, then if technology is entering some kind of a seasonal weak period, I want to stay away from the long side of the tech space and perhaps look at maybe some strategies. And most of you, if you're trading Thinkorswim, you're probably options orientated. You've had strong educational background in options trading, and it could have been from a number of different outlets of options educational people. But nonetheless, it really does help to have at least an understanding of some technical analysis. And if you're an options strategist, perhaps you're more numbers orientated or Greek orientated or volatility orientated in your trading strategies. Either way, if you're looking for volatility to expand or contract, you're still developing a strategy. And if you can understand the seasonal trends of certain sectors, it's going to help. And then start to look for scans in those stocks. So that's what we were really getting at with last week. The Commodity Traders Almanac, as it states, it is commodity-based, but there's so many ETFs now, and of course the currencies that trade with ETFs like the FXE. There are so many different seasonal trends within these commodities, such as UNG and for natural gas and USO or even the XLE or the OIH. In those ETFs, as we find that we're now entering in a stronger seasonal time frame for the energy space. Believe it or not, in the next 2 weeks, even though crude oil, we have rollover, we go from Feb to March rollover. We've got a holiday, 3-day holiday weekend with Martin Luther King weekend. You know, we still have approximately little less than 2 weeks left to January, and in the next few weeks begins a seasonally strong period in the oil sector. So I would say for those that understand what I'm about to say, like the XOP or looking at maybe some of the oil service stocks like your Halliburton's HAL or your Schlumberger SLBs, or perhaps looking at Devon Energy, some names that I feel that have potential going forward. We want to make sure that as we enter into that seasonal strong period of time, what technical tools will help us to detect the momentum change and now money's flowing into the market. Because I think it's very important, folks, that, you know, if you're going to get long the market, back in November, and I'm not going to do any more polls because I know what I've said and I know what I did, and I know we talked about SMH, the semi-space. And, you know, our good friend and comrade who founded Thinkorswim, Tom Sosnoff, Tom and I are fairly close friends and converse, believe it or not, frequently. And in fact, exactly 2 weeks ago, 2 weeks ago today, I gave him the trade on Google and to look for seasonal weakness in Goog. And so one of the other things that we kind of try to help each other with is Tom really takes some really good advice, and he does, believe it or not, have an incredible passion, not just for the business, but to help people succeed. And in this realm, the company in which he's put together is just surrounded by so many neat things. And I'm just really proud to be a part of it in a small way. So in any event, the absolute basis of putting on trades is to actually say, hey, listen, if I'm going to do this, you know, do I have the right capital? And is the risk that I'm about to accept worth the reward that I might make? And those are the things, and I'm going to close that out. I apologize for this. There we go. But one of the things that, in order to look for confirmation, if we're going to enter into a trade, and if you're bearish, you want to make sure that there's money coming out of that sector. You don't want to be the only one short and not have anyone else get out of the market. It's just going to sit there. But if it does sit there and you're in a credit call spread, perfect strategy. On the other side of the coin, if you're bullish and you're looking for the market to move up and there's no momentum, what is momentum? Momentum is a change in a pace of price change. If there's no price change, there's no momentum. And if you're in a directional strategy, that's bad. If you're in a strategy that you're collecting theta or time decay, guess what? You don't want the market to move. But for the most part, if we can utilize some trend-following techniques and look at seasonals and then utilize the tool and the platform that we have at hand, then I think we're going to see some really improved results. Last week we talked about, rather than looking at actual volume bars, we talked about the OBV indicator because it actually tracks the trend of prices when it accelerates to the upside or to the downside. And it helps to give us a clue if the underlying move is accompanied by volume in the trend direction. And of course, I believe it's better than looking at volume histogram bars. Another thing that we talked about is this little chart here. And I want you to just really focus in on between December as I have from mid-November into January going into February. And if you notice here that this trend starts to peak out at the middle or beginning of January. this is the IIX, the Internet Index. Some of the top names are Akamai Technology, Amazon, Baidu, Broadcom, Cisco, eBay, Expedia, Google, Netflix, Yahoo. Google is one of the ones that we just had some really good technical indicators to reveal that the momentum was starting to sway. And since the peak last week to even today's lows, we've seen over a 5% decline from peak to trough. And there might be some more coming in this market. Another thing we talked about last week was in applying seasonal analysis and looking at sector analysis, is that, and let me go back here real quick. When we take a look at these names, what this has relevance today and how we're going to apply and looking at using the thinkorswim and how we're going to come into looking at this scanner in just a few minutes, all right, is that what we talked about was if you could look for and scan for specific sectors and specific names and look for a change in momentum, then you know that the market is turned. And so that's really the key. When trading stock indexes, what we talked was, looking at seasonal analysis, it definitely helps us keep us focused on what the markets have done in the past. If we typically see a January sell-off, I'm sure when everyone looks at the S&Ps today and saying, okay, look, we made another new high, most people will say there is no way there was a January sell-off. And the fact is, there was and has been a January sell-off. Not all stocks have rallied in association with this move. And we know that by looking at the several different markets. Now, I can't show this on TOS, so I will show that and why I do have this up. So I'm going to just get right to the point, because this was on last week's session. Taking a look at the AD comparative ratio lines on the different stock index sectors. All right, so I'm going to show this page first, and then I'm going to revert back to my charts on thinkorswim. All right. So what you're looking at thinkorswim is, first off, we have, as you can see at the very top bar, we have Person's Pivot's monthly outlook. So the first thing that you see is that Person's Pivot's monthlies, we go up here to studies, I'm going to go to edit study, and you can see very quickly that I've got month selected. Now, when you go down to the properties, you can see time frame right here. If you scroll over, there's that little blue section there is a drop-down menu. You could change that to a 1 day, the average of 2 days, and that, by the way, we've done webinars before on this. What's the purpose of doing an average of 2-day pivots? Real simple. Let's say you get a very wide or tall range, abnormally long range day, and then tomorrow is a very narrow range. Sometimes you get these expanded, extract or compounded range days, and the next day are contracted, compacted days. And so if you take the average of those 2 days, it'll give you like maybe a target of what maybe the pivot support and resistance are. I think that's a little bit redundant, because really I like to look at the daily, I like to look at the weekly, the monthly, and one of the features that we did exclusively with thinkorswim was the option expiration. But honestly, the monthlies for a lot of the indexes and the top stocks are very rewarding for me to uncover two things: trend, and under that trend, whether it's bullish or bearish, what the potential high and low might be. And I'll explain that in just a minute for those that are not familiar with that. All right. Underneath Person's Pivots on a month, I have the advanced decline line, but notice what it says here, NYSE. And then the next one is on balance volume. I'm going to hit OK. So basically what we are looking at is a monthly chart or a daily chart with the monthly pivots overlaid, which gave us, as you can see, the Person's Pivot Study, PPS, is the bullish and bearish momentum indicators. All right? So that is these arrows that maybe trigger a potential bearish signal, and bullish that say, hey, the market condition is still bullish. So what we do is say, if it's bullish, what's the potential upside target? So Person's Pivots has targeted, and if you notice, there's only one resistance and one support. What it targets is one support, one resistance, and the reason is because the indicator, what's behind that, helps us to reveal if the market is bullish, this will be the potential high, and if it's which typically is R2 to S1. That's not to say that the market sometimes gets down there, but at least if you're a trend follower, you're in a bullish momentum. And we want to take a look at this chart and examine this and say, okay, should I be picking tops yet? Well, part of the reason why Person's Pivots is one indicator and PPS is a separate indicator. One helps us give us trend condition, bullish or bearish, and under that condition gives us what the potential high and low of the month might be in a example of using monthly pivots. The second indicator is the momentum indicator, PPS. If the market is in a bullish mode, it's going to pop into a green arrow saying, hey, it's still in a bullish mode. It's still in a uptrend mode. Now, that's important information because in following trend trading, there's the discipline. You stay long until proven otherwise. And that's been the message that we've talked to our trading room in our community here. And I know there's a lot of people in the room right now. I even had this message today. I said probably in the last week, I said people who are bearish the market, they didn't sell the high, they didn't sell the low, they're probably on average short somewhere in the middle right in here. If you were short S&Ps at, say, 65, somewhere in that range, what's the threshold of pain for someone short S&Ps at 65? And this morning we were around 70, 71. And that's 6-7 handles isn't going to make anyone sweat. But if we get into the 80s, up into the 90s, that makes people kind of sweat. Today we had a closing breakout. The market is still in a bullish mode. And here, instead of using an opinion, and instead of saying, well, look at just pure price action, what we want to do is kind of look at the complete breadth of the market. Is a lot of stocks going up in association with the index, or just a few? And that's where this advanced decline will help us. And as you can see, the advanced decline, we saw a new breakout. That's what this line represents. A new breakout to the upside in the advanced decline line. Unfortunately, everyone, this advanced decline is only based off of the NYSE. In addition, I want to say, gee, if this price has now made a new closing high. So I'm going to draw a little trend line, simple trend line here. So from January 10th, and I'm sure everyone will agree with me, that on the close on January 10th, the market was at 1470. Today, we closed at 1475 and a quarter. So pretty much we are 5 handles higher after 1, 2, 3, 4, 5 trading days. So based on comparing an apple to an apple on the 10th, based on that close, that was where we had an increase or a volume level. So if we draw a trend line, and now through time, the market has rallied, the question begs, was the rally on significant volume? And the answer is no. So out of the 3 components, price, breadth, volume, one thing that's lacking in this rally is volume. People aren't really committed to the market. And so this is just the S&P 500. Now we're going to get back to TOS in just a minute. We don't just trade S&Ps. We trade S&Ps. We have NASDAQ 100. We have the Dow 30. All 30 stocks of the Dow are in the S&P 500. We have the Russell. We have the NASDAQ Composite. And we have the NYSE. The AD lines that we just reflected with the NYSE shows that there was a breakout, but even here, as you can see on my charts using a different platform, this is Genesis, something we talked about last week, you can see that the on-balance volume, we just haven't seen that rally. Even though prices are moving up, it's not accompanied by an increase in volume. When we look at the the NASDAQ composite, we say, gee, nice breakout. We're almost taking out the highs from last year. The NASDAQ hasn't done it, possibly because Apple's down, Google's down, et cetera, et cetera. But I don't know if anyone's really looking at this, but one of the things that we are is that on this rally, we're not seeing a lot of stocks follow suit with it right now, number one. And number two, there's really a significant difference in volume. So the condition of this trend is now in question, and it's more suspect as we get closer to the monthly pivot point resistance in several of the indices. So part of the message last week that we wanted to say is, what's the weakest of all these sectors? And the answer, of course, from a perspective of advanced decline analysis or breadth work, and as in addition to the amount of work that we did with volume, suggested that the true weakness was coming in the tech sector. When you take a look at the small caps, nice volume breakout. And what I mean by that is real simple. The market's been moving up, and there's been an association with an accumulation of volume with that move. The only problem with this is the AD lines are flat. So that tells us that there is maybe a little bit more, or perhaps this is not just new fresh buying coming in, perhaps this is short covering coming in. And everyone knows and can see this gap a mile away. Some people can say, gee, they're going to come and fill that gap. Eventually, they might even want to fill that gap. But for the most part, that could come at the cost of someone's trading account. And until the trend and the momentum indicators revert into a sell signal, the discipline of being on the right side of the market is critical. So when trading stock indexes, this is what we talked about last week, is the seasonal analysis helps you keep on focused on what markets have done in the past. And while in the past we have seen that move where we get that January correction. And folks, I'm here to tell you, there is and has been a January correction. One of the other topics that we covered last week was in using volume bars. We look at open interest levels when applied to commodities, and we also look at the CFTC commitment of traders data. All right. Basically, if we start to see the market, it's like the euro currency, we saw a huge reflection in positions in both the commercials and speculators. And as we got in towards the end of the year, look how those positions contracted to almost a neutral standpoint, which either way, we could start to see the market either flip one way or another. And it was due to that contraction, number one, the fact that the euro currency was closer to support, and the fact that we were seeing a volume change. We didn't think, and more importantly, you see this red line up here? It's a lot higher than the prior month's red line. It was telling us, the person's pivots was telling us that the market trend was actually more bullish than bearish for the euro currency. So it's not just price action alone. There are certain indicators that you need to utilize to look at the condition of the market. Because if there's not enough change or potential change in the market, how can you expect money flows to make the market move? And making the market move is the definition of momentum. If no one's pushing the car's not going to move. If money's not flowing into that sector, folks, it's going to be tough to make some money. You know, I rarely talk about some of, and many of you have heard me many times before. Many of you have heard me talk about Gann or other forms of technical analysis. W.D. Gann was a trader on Wall Street in the early 1900s. By far, he was an astute mathematician. And above all else, he highlighted the geometric nature of markets. And I bring that to your attention because as Gann was more of a trend follower, and most of the work that I do follows trends. Seasonal analysis is a trend. It's just a matter of looking at semi or quarterly or annual trends in the marketplace. When we take a look at for example, if we see a seasonal trend in the marketplace, and as you can see that eventually a trend is going to end, and this is Google, and I want to harp on this just a little bit here, because if we're looking for a correction in the overall market, and if you could say, I'm going to be waiting for a trigger to go short, or instead of selling the indexes, I want to look for weakness in the marketplace, and that's how we can scan for certain stocks in certain sectors. Now, how we trade this is a different story, but that's a PPS sell signal in Google. You know, if you are selling all the way up, it's a problem. You wait for the trigger, because let me put it to you this way. Many people think, and I don't know if you can see this, I highlighted this, it's very magnified, all right? The PPS signal is here, agreed? That's the orange arrow. It's pointing down, which means it's bearish. Can everyone see that? All right. Now I'm going to take a quick second to read some of these posts. Someone's saying that they have an issue with audio. The audio is okay. All right. All right. All right, good. All right. Now, if you take a look, notice that the moving average, yellow, is above green, and yellow is still above green. And finally, yellow is above green until this close. This close causes that moving average to cross over. So people say, well, gee, it's a simple moving average crossover system, and no, it's not. What the moving averages are there for the most part, folks, when you're using PPS, it's several different methodologies behind it as well. If the market's bullish, if you get a buy signal, as you can see here down at the bottom of your screen, bottom left corner. In fact, you get a nice little high close doji. That's a shameless plug for one of my setups, but in any event, you get a nice little buy signal in the market. If the market's truly bullish, the price should stay above the moving averages. That's kind of like a one of the best little trading tips. They're there to lean against. If the market breaks out, you look for pullbacks to the moving averages. One of the things that we really teach our students here is how to trade effectively to put yourself at an advantage in the position. So if we run for scans and we're looking for seasonal strength or weakness in the market, and I run for a scan and I say, hey, Google was at 745 and now it closed at 723. Well, I don't want to get short here. But if you take a look at where the price is in relationship to the moving averages, if you're disciplined and if the trend is going to change, okay, then what you would do is maybe, again, as a mathematician or like Gann and looking at trend changes, this was a momentum change. It just said, listen, the market's going from up to now bearish. If it's going to continue down, then what should you see in a bearish environment? Lower highs and lower lows. So look for snapbacks to regress or return to the means. So that way you can kind of, instead of put yourself in a, even if you went short here, I mean, you're doing okay, right? You're doing okay. But if you went short here up into value of moving average land, you're doing a lot better. All right? So That's one of the ways that we like to utilize PPS as well as integrate it with the pivots. It's not that it's not very hard, it's not very complicated. It requires a little bit of discipline and understanding. But for the most part, if you can sit there and practice patience and wait for the setup, and even though, and I'm going to delete the drawings here, all drawings, there we go, all right. All right, so I just showed you Google. So here's Apple. Apple's a very similar in nature situation. Last week, if you take a look at that low, you take a look at this level, there was not a departure, huge departure from the means, and now we see this kind of move in the after hours. It doesn't, it gets redundant. I think to reinforce, it's kind of a neat way of looking at the market. Today, for example, I'm going to bet, I would bet no, I'm not going to bet because I know what the answer is already. Not that I'm cheating, but I already know because I know what our students are and I know what we do. This is monthly pivot resistance, 1481. We've been talking about this. This trend, incidentally, today, buy signal, momentum, market goes up, but instead of waiting for that bearish indicator, there's one of the patterns that we've written about that many of you probably already know about, and it's called my low close doji. In fact, we talked about it in last week's session. Doji forms, and all of a sudden you get a change in momentum. So there's a way to trade that. But let's say you don't know that pattern and you're just looking at the PPS. The market generates a sell signal, snaps back. If the market's truly bearish, what is going to happen, folks? We're going to go from an uptrend to a downtrend. It's a bearish momentum. And if that's the case, instead of selling it at a disadvantaged price, you wait for the close and then maybe look for a little bit of a snapback for the market to cradle into those moving averages. Now, sometimes, and this is trade management, sometimes you get a phenomenal trade, and sometimes you only get, what the market gives you in a short period of time. So now that you know what the power and what we look for and what the PPS bullish and bearish momentum indicator is all about, it's actually pretty sophisticated and in its simplicity. So if I take a look and I say, all right, the January effect, and I'm going to do something that comes right out of my book. All right, and I'm going to go over here and I'm going to create a chart, new chart, and I'm going to go to let's take a look at the E-mini S&Ps. I'm going to hit OK. I'm going to hit a spread chart. I'm going to go minus, and I'm going to go TF, go for the Russell. Edit here real quick, and I'm going to get rid of all this other stuff because we don't want any of this. We just want a simple spread chart. All right, simple spread chart. What you're looking at is actually a spread. What commodity guys like myself say, this is a spread chart. It's tracking the difference between the S&Ps and the Russell. Other people may call this several things: a pairs trade. And technical analysis, we would call this a relative comparative analysis chart. If the S&Ps, which is the first symbol that we use, is going to outperform the Russell, then this chart goes up in value. And to identify, right now, as you can see, the chart is in an uptrend. It's also nice to know that this January effect starts to lose its presence. And so one of the things that you want to start to look for, and is this, as you will see, this is a spread chart using a line closing based on a close chart. So let's go over here and let me mess up one of my charts on TOS. All right? How do you do this on TOS? Real simple. /ES dash /TF. Now, notice that it just came up and gave me candles. What I have to do is go over here to Style. I have to go to Chart Type, which is defaulted on candle, and I have to go down here to a line chart. I have to go to Studies. I have to Edit Studies, and I know that this is going to hurt. I have to undo the study here, and I didn't. I don't want to do that. It hurts my feelings. We'll put you back. Don't worry. All right. Okay, so this is a 15-minute chart. Let's go to a daily chart. All right, it's very similar. You got to say it's almost exact of what we were just looking on the other platform. So now here is a relative strength comparative chart using the S&Ps versus the Russell. Because it's a line chart, it lends itself to trend line analysis, trend line breaks. So in this time frame, if we start to break the trend line, that would be an indication that the S&Ps are no longer outperforming the Russell. Right now, it's suggesting that notice what had happened here. If the S&Ps are outperforming the Russell, then the spread should go up. When the Russell outperforms the S&P, the chart goes down. Notice what happened. The January effect took hold. Now we're seeing more money coming into the S&Ps. I don't want to be too much of a pattern type of guy, but I'll tell you right now, if you possibly look at maybe a little bit of a left shoulder, a head, and kind of a right shoulder, if we break this level and break out, that's saying that the S&Ps is going to outperform the Russell relative. So on a relative basis, all right? What does that do for you? Well, a lot. So let's turn to our scanning feature. And we're going to go over here where it says Scan in All Stocks. We're going to go to that drop-down menu, and we're going to go over here to Personal. And go over here, excuse me, Public, not Personal. All right. Now, the public, if I go down here, Russell 2000. Interesting. If the Russell 2000 is overbought, if we're starting to see too much, or maybe there's going to be a correction, if seasonally speaking the market starts to adjust itself, if the AD lines in the Russell are starting to suggest that this and the volume's not going into the Russell, then what we want to do is go over here, select to scan the Russell, hit Add Study Filter, and we go, and you'll see we're going to just get rid of that. I can get rid of volume right now, and I can get rid of this if I want. And I just want you to focus in on when I click Add Study Filter, the first thing it defaults comes up ADX crossover. It's a drop-down menu. Click on it. Real simple. You go all the way down to JohnPerson Studies. Now, if the Russell is overbought and you're looking for signs of the market being overbought, what do we want to do? Look for a lot of sell signals. If there's a lot of stock that has a change in momentum, that's not a very positive thing, correct? So maybe we have some confirmation that we're seeing a sector start to lose momentum. So instead of guessing, we can use more educated, testifiable information. So click on PPS sell signals. All right? Now I'm going to go over here and I'm going to just hit the button scan. And that happens so fast, it makes it scary. All right. there are an enormous amount of stocks that have generated, and if you want, you can put these into an Excel. You can do so many things. It's ridiculous. But as you can see, we are starting to look at quite a number of sell signals generate on a day like today, and you have sell signals, right? So again, up here where it says Add Study Filter, go over to the drop-down menu that pops up. It says JohnPerson Study. If you're scanning for sell signals, you want to go PPS sell signal. If you're scanning for buy signals, scan for buy signals. PPS sell signal. All right? And you hit scan. All right. Now, in this book that I talked about earlier today, Mastering the Stock Market, on page 216, and this came right out of the book, we talk about just exactly how that runs and how to do the bullish and bearish momentums and how to run that scan. All right? You can utilize the different filter criterias in there. And so one of the neat things is like with golds. And in the book, I thought I'd share this because this is pretty cool, because we're entering, by the way, and I know gold's breaking out, and we could see a move to like, say, 1730, something like that. I'll show you real charts in just a second. But if you take a look at gold and the gold miners sector, we really start to peak out as we get into February. So let's say you look for a short and you get down in the short mark, in the short setup. At least in that area, you either wait for a low close doji or an actual trigger to get short. When typically we get a PPS buy or sell signal, it's a momentum change indicator. I mean, not all times will you see the market snap back to the moving averages. Why? Because let's say, for example, this particular setup that was in the book, which you read about it, but one of the things that it talks about, it wasn't a huge departure from the means. More importantly, one of another kind of patterns that you see here is kind of like that M top. But if you're not familiar with the seasonal time frame that this sector enters weak period, then you probably won't give that setup as much importance. To me, and this is very important, if there's a time period of weakness in a sector or a stock and I get a sell signal, that tells me that in history, this is a time frame that people take the money out of the market. And I didn't invent this term, but everyone's heard of it, I'm sure. Sector rotation. When those that run capital markets and funds, mutual funds, decide to get out of one sector, none of us get that email alert 3 days before it happens, do we? No, but you see money come out of the market, and then all of a sudden in the news you'll say, that market that sector went down, it got smacked, a little sector rotation, and all of a sudden there it is. And that's where the power of lining up seasonal analysis and how to utilize this on a product like Thinkorswim. How do we put this together? How do we look for trading opportunities? I mean, I'm sure all of you can figure out a trade to put in if we start to see inherent weakness in the Russell. Very simple, RUT, IWM. More importantly, you could look at all kinds of option strategies. The next element is, what's your time horizon? All right? What's your time horizon? And that's where seasonal analysis can help you. So I don't think, if anything, let's say, for example, I want to run a scan, and I'm going to go, forget the Russell, all right? And I want to go over here and look at futures or whatever I want, S&P 500. I can run a scan on a daily, weekly, 5-minute, 10-minute, To run a scan every 15 minutes, a little tedious, but if I'm going to look for a week, and here's what's really cool. What's tomorrow? It's the end of the week, right? So I can run a scan to see if there are any weekly turns in the marketplace. If there's a weekly momentum change, and I'm just going to do this right now just because I just want to satisfy my own curiosity. Now, this is being recorded, and I may have talked fast, but I want you to understand. You can review this information, and I understand it's, it might be new for a lot of you, but it's pretty cool stuff. It's not just cool; it's dynamic, and I think that, for example, when I'm going to hit this button scan right here, nothing came up, and I was thinking that we would see something. Not that today's Thursday, but if there was a flashing threshold of a sell signal, then it would warn us right now that if the market crosses or closes below a certain level, then it would be a trigger of a sell signal. But we didn't get anything. So I'm going to go on for daily and see what happened. So today we had all right, so Citi generated, and who's this other one? And let's take a look at this guy, NE, and then USB. All right, well, USB today looks like a very significant bearish engulfing pattern, generated a sell signal. And when I take a look at the next chart, a weekly chart, this is kind of, notice what I just did, and this is something that, I'm pretty emphatic about. Anytime I look at a daily sell signal, I want to look at the monthly condition. Because if the market gives me a daily sell signal and it just cradles right into maybe an old level of a shelf, I want to wait for that market to give me a sell signal on a weekly basis. Because all this market did was just cradle right into the weekly moving averages. Until I get a bona fide weekly sell signal, I don't think I would be touching USB right now. NE was the other one, and NE, this is almost a triple top or a three rivers top formation. And in that situation, this might intrigue me. Nextera Energy Corporation. And I do a little bit more, what I would want to do is a little bit more study in there because I'm going to probably say it's, as we enter a strong period, at the very least, I'm going to say it's probably not a very strong candidate for an options strategy. And then last but not least, we had what? Citi. Citi, on the other hand, long-term trend. Citi forming a little bit of a gap. I would say if this market comes back into this area, this 42, back into that value area, just right into those moving averages, I would want to keep my eyes peeled, personally, for an end-of-the-week scan. And if you take a look at the end-of-the-week scan, folks, this is pretty scary. It's a fairly significantly scary chart for Citi because in this whole move to the upside, it's come close to its monthly pivot. Tomorrow's Friday. It's the end of the week, and this weekly chart is going to close right underneath that low. So to me, this might be a little bit ominous that we go at the very least for maybe a credit call spread or a short-term decline headed into the next few weeks. So that particular market is of interest to me with Citi. So how do you utilize one with the other? If you want to quantify, you go to studies, and I'm going to add a study real quick. I'm going to add one other study, and I want to look at on balance volume. I'm going to go right. Okay, this is tough for me. On balance volume. There it is. Okay. So, all right. Now let's take a gander of this together. Now we just did a little bit of analysis. So everything that we talked last week, and we're just trying to put one and one together. Not to confuse you, but just to say, gee, let's take a look at this. The market made a higher high. How many people see that? Am I right? And what was the duration of the trend when it broke out from this week? Count with me. 1, 2, 3, 4, 5, 6 weeks. All right? So we've had a 6-week trend, and price made a significant, from the close of this week, which was at 37 and change, comparing an apple to an apple, and then the close of this week, which was 42. We have a significant higher high, as I've just outlined. But there isn't a lot of volume associated with it. When this market rallied that amount, it did not attract new buyers in the market. I don't know. What do you think of that now? All right. So, granted, they missed earnings, and I think that's all out there. But when we take a look at this type of analysis, and while we have, for some of the missed earnings, it wasn't that bad. You could probably come back, fill the gap a little bit, chop around because of expiration, blah, blah, blah. But I think at the very least, the longer-term analysis is telling you not to buy breaks right now. All right? So our friend W.D. Gann, this trader, this mathematician, right, trend following, and a lot of the things that I've just gone over today has to do with, and I apologize, I assumed, and you know what happens when you assume, and I thought that the majority of people came here last week were with us. And so, we had a really, I thought, fantastic presentation, how we use these indicators, how we use scanners, and so if you weren't here, that's bad, but I think we made up for it today. Spend a little bit more time on how to utilize the TOS scanner, how to incorporate Person's pivots, why Person's pivots need to be accompanied with the PPS indicator, and the fact, just as a review what we covered, the PPS indicator is not just based on a moving average crossover. The moving averages are there to help us maybe formulate an execution or entry strategy, right? They also help us to identify the trend. One of the things that Gann stated is that time is more important than price. And this man never stopped studying the markets. Time is more important than price. So let me tell you about Person's pivots, all right? What's the power behind it? Time. If you take a look, more times than not, the indicator targets. If you see this red line is higher than that red line, at the end of the month it said next month the market condition is bullish, but if it's bullish, it's probably not going to go through the roof. Watch for resistance up here. More times than not, Person's pivots, and in conjunction with the PPS. This is a month right here in May. At the end of April, it said, look at this. Is this low? The red line is lower than the prior month's red line. Let's zoom this up. Okay, so here we go. It's the beginning of April. The market moves up, and we have this little blue, this little arrow. The market moves up, and it's the end of the month, and all of a sudden, notice that the line is now, you think, hey, we got a rally. The market broke out, and here we are at the beginning of May, and the pivots have been adjusted. It's giving you a targeted of a lower high. If you were looking at price action, a lower high and a lower low is not a bullish outlook, is it? Okay? So that's where the person's pivots combined. You already have a bearish outlook. The technical tool on person's pivots gave you a lower high reading. PPS said, oh, wait, we have a sell signal here. This is not good. You have a sell signal. And then all of a sudden, what happened? The market didn't really depart too far from the moving averages. Do you all see this, what I'm referring to right here on that sell signal? At least you now can say, gee, we got an end-of-day sell signal. That can't be good, especially when the monthly outlook has been changed to bearish. Maybe I should stop buying. Maybe I should tighten up my stops. Maybe I should sell rallies. Maybe I shouldn't buy a break until the momentum changes, right? And so as you stroll back and just take a visual back test study to see how it applies. And as you can tell, I mean, under no circumstances has it told you to get long the market. I'm not saying it's a perfect system. It tells you, hey, try and get it along. Very next day it said, that's not going to work well. The discipline is to follow what the system or the momentum is telling you. And if you do that, at least you'll be on the right side of the market more times than not. And that's the key. That's what I wanted to share with you, because I think there's a lot of folks that miss the opportunity of the power and the performance that this can help people with. And, again, no system's, 100% perfect. But I think when we combine certain tools to check out what the health and the breadth of the market is based on the indicators that I've just shared with you, these are the things that I think you'll be able to make better educated trading decisions. And that's the key, better educated trading decisions. So we did go through a lot today with the PPS, person's pivots, why we look to run scans, how to run scans. It's a matter of coming up with a concept, and maybe this might be, too much. And then what I do is not for everybody, right? I mean, jazz music is not for everyone. Grateful Dead music isn't for everyone. Led Zeppelin isn't for everyone. I know that's blasphemy. I take that back. I mean, if you look at all the golf pros out there, I mean, some people hate Tiger, some people love Tiger. I mean, different Jim Ledbetter versus McLean. There's all different types of schools and styles. It's what you relate to. What's neat about this for me is that since I'm a student of the market, never stop studying the markets, we've put together some exciting and really cool stuff. And my work continues. And I think last week when we put together the presentations back to back, invited people to come into the room with us, we had some people that were saying, hey, you're teaching Genesis, why aren't you teaching TOS? We did. We taught TOS Monday and did a little session, but it wasn't for the masses, and so we felt we would do this. In addition, there were a lot of people that said, hey, I want to know how to learn how to do what you're doing, John. Many people weren't really aware. They just thought I'm a pivot guy. They don't know exactly what I do. And because of that, we put together, if you're interested, to help you in your continued education, an incredible product. It's been around. It's my Stock Trading Simplified, combined with our Mastering Stock Book, which has just come out. It was released, John Wiley & Sons, the middle of December, I believe. I mean, everything here from start to finish, how to start trading, knowing the pro secrets, looking at business cycles and seasonal cycles, looking at stock trading tactics, how I go from my top-down approach, how I list all the different sectors and the stocks within that sector. Not a heat map, but more importantly, a more detailed type segment of what sectors are entering their strong seasonal weak periods. How to look at a signal, what constitutes a signal, the trading rules, my setups, how to use pivots appropriately and correctly, and of course trade management and stop placement. So in any event, we have this available. It's I think, an incredible offer. If you're interested, you want to continue your education and at least put things together, how I use my work, the DVD course and the book, which will autograph, just came out, and then we'll do a follow-up one-on-one Q&A class in 30 days, give you a chance to review the information, but you need to review the information. So if you're interested in this, and you want to learn how to utilize the scanners more effectively with the way my methodology is, then this is an appropriate educational format for you guys. So just wanted to make that offer out there for everybody, because we had a lot of people who were asking for something. They didn't want a new platform. They didn't want this, but they wanted to know more about me. So if you are interested, this is what this is all about. The offer is out there. And I know my son, John Jr., had a couple questions that he wanted to answer. So I'm going to switch the mic over to Johnny real quick.
Yeah, thanks, Dan. As obviously we do our best to try to answer the questions that you guys are putting in here in the room throughout the presentation. And I do want to mention, as we're getting, obviously you wanted to get to those toward the end, but I had a number of people coming in here and typing in the questions on, what do I do once I do see a signal? What is the setup? Where do I place my stop? How do I get into a position? That is something, again, that we cover in this Doc Simplified course. Obviously, Dan has done a number of presentations for TOS directly, and we get these questions on a regular basis. So what we wanted to do is actually kind of create something that goes into how to use our indicators. To answer the question, when is, the seasonal time to get an XYZ stock? Well, we give you that information. The pivot points. I saw an excellent question. What determines whether I use R2 or R1? Well, that's answered as well. So a number of the questions that you guys have been typing in, or trust me, are questions that we answer on a daily basis with our TTU students in our Trading Triggers University program, as well as, obviously, Butch does a great job in answering those questions on a daily basis. But again, to take advantage of this, I believe the regular price on this on the website is $8.89. So, I don't know what the percentage is right off the top of my head, but obviously it's way more than 50%. Not even including the book. I think what's a book cost, Dad? About the 60? Anyways, again, so for those individuals that how you're asking the questions on the overall pivot points and how to use them, and what determines what levels to be using, this is an excellent course to use, especially answering those seasonal cycles right off the bat. And then again, Chapter 8, in the course, going into when to enter, when to exit in terms of the PPS, what constitutes a signal. I know a number of you guys are asking that question. How does a signal get derived in the system? So perfect. Also we touch into trade management and stop placement. For those individuals that want to take it a step further and want, thanks, Brad. Thanks. It's a great introduction overall to what we do and the, overall methodology. So, and Russell, in terms of Trade Navigator, you're also, there is no, we've worked it out where there is no software cost. So thanks, Russell. Normally, yes, there is about a cost of $1,500 to $2,500, but for us, we've actually worked it out where there is none. If you're picking up our person's indicator or our high close, low close doji scanner. But again, Dad was going through TOS's capability of running a scan on the indicator, and how did PPS tell? See, Mr. Zim, if you take a look at it, again, it's completely explained in Chapter 10, more in detail than what we can do here in a presentation. That will give you the exact explanation of what would be the reasoning for, an R1 or R2 level, and also, I believe you cannot, but you can go ahead and take a look at our person's navigator. We'll go ahead and give you that. So again, with questions coming in, folks, it's a fantastic introduction to what our methodology is and how to use it, and that's kind of what I've been going through right now, and to answer a number of those questions that a number of you were having. Yeah, Stephen, I'll go ahead and put the link in here for a second. Hang on, let me go ahead and type it in there for you. Hey, actually, Dad, can you change if you could actually put the here, I'll do it. It's personsplanet.com/getoffer.html. Not really, Harold. I wouldn't say they're competitors. TOS is a brokerage, and Trade Navigator is a software company. I use both. So that's something that needs to be, and a number of individuals here use them, use both. We use Trade Navigator for our seasonal work and our analysis, and TOS as well. But obviously there's some things that Trade Navigator does that TOS does not. But again, they're not the same by any means. In terms of the trading room, that's an excellent question. What I want to do is, again, for those individuals that haven't done it before, email me personally. And I would love to get you in there. One-time fee. Hang on, let me check. Where do you see one-time fee? Oh, well, one-time fee. It's a course and a book. I don't know why that's in there, but thanks for mentioning that. You're just purchasing the software, the course and the book, and there's no there's no other fees along with that. So I think what they were meaning that there's no shipping costs, I believe, maybe. Obviously, if it's international, there is. But right, it's not a subscription service. Thank you, Brett. It is a one-time offer. I mean, again, if you compare it with our what's online, between the book, $60, and the course, which again is $849, you're talking $900. You're paying for it, so you're getting about 60% off. PJ, you're going to get a copy within a few days. Yeah, it's not a one-time. Again, it's a one-time offer. Again, you're getting a substantial discount to be able to get, the introduction of a fantastic methodology that's used by a number of individuals. Again, for those individuals that want to learn more about our coaching in our university program, email me personally. I'll be more than happy to get you in terms of a free trial. But if you're also, let me give that link to take advantage of that offer. And also, Dad went ahead and put on there that he's going to set up a Q&A session for those individuals that purchase about 30 days from now to give you the ability to go through everything. And we'll go ahead and review all those questions at that point. But I believe a number of the questions that were asked here are going to be answered in the course. Let me type in there again, personsplanet.com. Let's get offer.html. And then, of course, any other questions, feel free to email me. I'll be more than happy to answer those for you. I think, Dad, I want to congratulate you. I think it was an excellent presentation. You've taken the time to share how to run a number of different features on the TOS platform and explain how to set that up for everybody that obviously have an account with TOS. And I know that we've been getting a number of questions of how to use that new scanning feature on TOS, new meaning within the past couple months, how to correctly use the PPS and the person's pivots, which I think you did an excellent job in terms of doing that. I just want to thank you, Dad, for that. And again, for those individuals that wanted to, go into more detail, obviously than what we had time for, take advantage of the course. I mean, it teaches you step by step how to do what we've been discussing, and then to have the ability to go through it again privately with John in a small group to cover these questions. If you have any, it's a perfect opportunity. Thank you, Arthur. That is actually touched upon in the pivot section. And actually, you're going to get you're going to get a copy of the presentation today. And I do want to let you know, again, that question, believe it or not, answered in the presentation that was given. So you'll be getting the copy of the presentation within the next few days. I will let you know that we do not have, the book. I'm glad, Dad, that you put it on there, but of course we don't have a number of the books available. So please keep in mind, the first 30 or so that come in will be able to get that book all combined. But besides that, we'll be out of stock on that, and the offer will no longer be valid. So please take advantage of that. I believe, Dad, from the reviewing that I did on that book, I think it's probably one of the, I would rate that the new stock book, your top. I don't know if you'd be happy with how I'm rating your books, but I would say, I would say top 2 overall. I think you did an excellent job, in this latest book that came out. It's excellent reading material. Of course, I've read probably about 3 of the books that you've done so far. So at least I'll be honest here and not say all. Sorry, Dad.
I'm surprised you read one, actually, thoroughly, cover to cover. I don't know. I'd like to do a poll, if everyone is still with us. How many people think I should strap my son to a lie detector right now with a cattle prod for every lie and make sure that he did read every single page of all the 3 books? Go for it. I'm just saying. 2 cattle prods, do you think? No. Oh, my Lord. I know. I could do that. Thank you all. Yeah, we're very proud. John's just a great son. And, this is a great, as you said, great way introduction to come in to see what we do, at least learn these things the right way. Be a student of the market. And I think this year, 2012 was kind of rough. Not all sectors did well. There was a lot of scary stuff out there. And, one of the things that I keep talking about in our room is that, and I know we got people in the room that will, call me out if I forget to say the exact phrase, call me out on it. But I know I've been saying the media only is there to sell fear and bad news, because bad news sells. And so if we're all focused in on the bad news, man, you just sell this whole rally, because it was first the fiscal cliff, and then it's the debt ceiling, and then it's this, and it's that, and it's so many negative things out there. But when you look at the internals, and when you look at the quality of the marketplace, I think that kind of helps us out. And more importantly, it's real simple, and to me it's simple, and you know what? I think that's why furthering education is important. What time of the year should I be in gold and silver? I did a presentation. I know it's on Money Show because it was webcast. Now listen carefully to this, everybody, before you log out of here. Back in November at the Las Vegas Traders Expo, I did a presentation to end all presentations. And I said, how many people in this room now are trading bond futures or treasury bonds via ETFs, either the TLT or TVT? Pretty much a lot of the people didn't raise their hands. And I said, how many people had done it? And a lot of people raised their hand. They were just tired of selling the rally. And I said, let me tell you something. This is now a time that we see a turn in the marketplace. And there were 3 calls that I gave at that presentation. A, I showed where the euro currency rally is going into year's end, and nobody in their right mind was looking for the euro currency to go up. So first off, the exact day that I talked about the euro currency, and this was really key. Now, let's say you don't care about the euro currency, but you might trade the FXE. But on the exact day, and this was recorded, and I know that link is available on moneyshow.com, and it was 6E on the euro currency, and it was right there, high close doji. I gave the presentation that night and said, from this time frame, and there's a high close doji on camera, and I said, between now and year's end, the euro currency rallies. So let's say you only caught a portion of the rally, or maybe you were looking, as we were, for a decline in the market, which we caught. but certainly our tools and techniques shared with us that the market, there wasn't enough participants in the market to see this thing move lower. We covered. We hit the hills. Actually, we did a credit call spread in the FXE in this trading room, and I know people were in that trade. We also talked about, I at that new November Expo, right there that night, right there, I was on stage. And I said, how many people are trading natural gas in UNG? And I mean, it was spooky. Listen to me. It was crazy, the amount of people that were actually in the market. And I said, this is the worst time of the year to be in natural gas. So if you're long, tighten your stops, be careful, because natural gas prices tend to peak. And by the way, this is not rocket science. This came right out of the Commodity Trader's Almanac book. And it's right there. Towards the end of November, early December, nat gas prices decline, and it has kind of a multiple or biannual type peak and biannual type trough. There's two seasons for highs and two seasonal trends for lows for prices in nat gas. In the wintertime, people think we use more nat gas for heating homes, but in the winter, electrical companies will use, if coal and other fossil fuels are too expensive, they'll power the combines with natural gas to provide electricity. So with that said, I mean, you had a technical double top in the marketplace, okay, and then I'm showing. And I mean, really, if you would scan for that, I mean, it's just UNG. But either so, if you could scan for looking at inherent weakness in the marketplace, at least be able to know not to be in that trade that time of year. So there are some extreme benefits of whether you're trading the market. One of my comments about bonds was amazing, because I said, you know, so many people are so tired about bonds, no one will ever want to trade them again. And I mean, the room laughed. And it's kind of an interesting recording, but I was reminded about that, and I just thought I'd go over that with you, because in seasonal analysis, if you're trading these ETFs, it's fantastic. And you know, just running scans. If that sector is going to be weakened, or you're going to see a decline in that sector, why would I want to look for stocks? Or if that sector is going to start to pick up, why don't I look for some buy signals in stocks in that sector? And then it's just a matter of knowing what scans to run, number one, and how to quantify those particular signals. I mean, no offense. I mean, it's like, I'll just take a small sampling. I mean, a buy signal, nice trend run. A sell signal, nice trend run. Buy signal, nice trend run. Sell signal, market went down to flat. Buy signal, went up, got a little bit choppy here. Sell signal, went down. Buy signal, sell signal, got a little choppy, but up, down. I mean, for the most part, man, this PPS has really been nailing a lot of these trends in the market. What you need to do is be able to capture money from it, because, you know, you might get a trend and place an order and not get a snapback. So, again, execution is incredibly crucial, because there's a lot of times we get great buy signals and the market doesn't pull back and you don't get into the trade. But at least don't say, well, I can't buy it, so now I'm going to get short. Why would you do that until you got a sell signal, right? Wait till you get a sell signal. So if you get a sell signal, then you can sell until proven otherwise. So even for natural gas, it's a nice little way of looking at the market. If you follow up the methodology of what my entries are, what is our snapback approach, what kind of stops do we use, you know, those kind of things. I think you get a really fantastic eye-opener. I'm going to promise you something, too. It's funny, because a lot of people have education. They go, oh, no more of this technical analysis stuff. I guarantee you in this course, you're not going to hear one thing about Bollinger Bands. There's nothing in here on Bollinger Bands. I'm going to tell you that right now. And I think people have been banded to death. I'm not sure. They may work great for people. I don't use them. And I just think that there's better ways to look at the market. And I do want to share with someone that I'm not sure if he's still here. I saw a post that someone was asking a question, what constitutes the figuring out these pivot points. And what's behind the scenes that you don't see is a moving average concept that helps us filter out the support and resistance based on a long and a short-term moving average. And the components are based on a pivot point, not the close. So again, and that's information that is in the course. But thanks for spending some time, and I hope we made it worth your while. Hope we went through the Thinkorswim platform, how to utilize indicators better. We generally try to put some really decent educational webinar classes together, and if you enjoyed it, we appreciate it. And if you think we could do better, we're always in for insightful, constructive criticism. I wish you all well. John, thanks for being here. Everyone, have a great holiday on Martin Luther King. At least you got something to study up for or to tinker with this weekend while you figure out how to utilize the scanning features more appropriately using JohnPerson's PPS buy and sell signals. Everyone, have a great evening. Thank you. Thank you.
And then, yeah, if you could leave that